Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views. Hey, good morning. All right, CPI is out. Might have had a little bit of a data leak yesterday, not sure. It's like that number was somewhat known. Strong day yesterday, much stronger day looking like today at the open. Before the reading, futures up, commodities up, bonds up, dollar down. Yesterday we saw strength, especially in long duration stocks like the Mongos and the Smart Sheets and the Snowflake. We talked about that a week ago. Starting to see signs of life there. Those things are raging this morning. We'll talk about that in a second. In front of the print, so we've got a 0.1% on headline versus 0.3 expected. Ex food and energy, we had a 7.1 year over year. CPI ex food and energy core year over year, 6 versus 6.1 expected, so cooler across the board. Front runners got it right. Bonds are up, yields are down. No wage component to CPI. In my opinion, this does put the Fed in kind of a tough spot tomorrow, going into the Fed meeting. Because with things raging like this, if the perception is Fed pivot, it's over, off we go, then I think the Fed's going to worry this thing gets out of hand in terms of spending again, what have you, especially on the services side. And then he's in a pickle all over again with inflation starting to run. So he's got a tough job on his hands, in my opinion. But that may not matter for the rest of this month. So keep that in mind. You've got Fed decision tomorrow. But right now, though, you're going to have the dollar breaking down through support. You're going to have a number of stocks and indices breaking above their 200-day moving average. We'll start right here with the S&P. So S&P right now, pre-market, looking up almost 3%. You see it right there. 410 is the level on the SPYs. That is above 200-day. That's maybe more importantly, well, definitely more importantly, above this trend line that we have not been able to sustain yet. So let's see how they start to act today. We look over other big names. NVIDIA is going to open up well above that 200-day. Boom. 186 is where it's looking right now, up 6% this morning so far. Keep your eyes on the XLK. Technology within the S&P 500, that thing's looks like it's going to open 138 and change, which is also above the 200-day a little bit. So important to watch, not just where these things open, how they trade and where they close. So a gap up and close lower, not strong. A gap up and trading higher, definitely more strength. But even you look at the precious metals, gold looking up almost 2%, 168. That's going to be just above its 200-day moving average. You go down to oil, looking up 1.5, still, sad. Nat gas, though, taking on all kinds of new signs of life, up almost 8% this morning. So I think the way to think about it, in my mind, the Fed's somehow got to talk this down a bit if we do have just a monster day today. But at the same time, you're going to have Santa Claus potentially. So I think the idea of we can reignite a run into year end is completely on the table at this point. So what's going to run the most? Probably the stuff that's been down the most. A lot of those, tech names, long duration assets. Look at Mongo today up 6%. Snowflake's going to be up probably about the same, 7.5. If you look at semis, applied materials, which we bought a few days ago, up 5.5%. Semis are going to rage. Software is going to rage. That's just kind of whatever shorts are still around are in those types of names. So they're going to be a little bit panicky. All right. Have a great day. We'll talk to you tomorrow. Let's see how this thing trades and closes.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital LLC as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns, primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF strategy, with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some risk aversion in the event of significant market stress through investments and ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital LLC has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, www.grinnellcapital.com.